If you have been watching the meme coin space lately, then you already know things are getting interesting again. But among everything moving on the charts, there is one coin that is silently building something bigger beneath the surface. This is SHA. And today we are breaking down what is happening on PEPE, why the structure is still intact, and what the chart is actually hinting at for the next major move. Right now, the price of PEPE is sitting around 0.045. And if you remember our last discussion, we marked the key support at 0.040. That level behaved beautifully. Price came into it with weakness, but instead of losing the floor, it formed the second bottom exactly where we expected. From there, we saw a clean bounce, a reaction that confirmed that buyers are still defending the zone with strength. But even with that bounce, PEPE met its first challenge at the area of break of structure around 0.049. Price tried to push through, but the volume was not enough and the market rejected that level. On the surface, this looks like a failed breakout, but when you zoom out and study the structure, you see something else forming. The chart has now completed an inverse head and shoulder pattern. The neckline is exactly around 0.049, the same level price could not break earlier. This is a good sign because whenever structure aligns with a key level, it becomes more meaningful, and the momentum that eventually takes it out is usually stronger, so the direction is still clear. For PEPE to unlock the next leg upward, we need a proper breakout above 0.049. Once price closes above that zone with conviction, our next resistance stands much higher near 0.056. That stretch is the expansion area where liquidity is waiting and where PEPE historically moves fast. If buyers show up again the way they did on the second bottom, the momentum can shift quickly. But here is the part most traders miss. Even if price retraces and revisits the 0.040 support one more time, the structure will remain bullish. In fact, a retest would deepen the base and potentially form a third bottom. When you get 3 taps on a strong support, the level becomes even more powerful because it shows that sellers are running out. Every dip into that zone pulls in demand, and if demand keeps stepping in, eventually the breakout becomes unavoidable. So overall, PEPE is still in a healthy range. The inverse head and shoulder is already formed, the neckline is clear, the support is responding, and the structure is telling us that the bigger move is still setting up. Now it is just a matter of waiting for the right breakout and letting the market show direction with volume. If you enjoy these breakdowns and want more chart-based insights like this, stay connected and follow along. I will keep guiding you through every major move in the market.